Hey guys, welcome to Money Farming YouTube channel. And in this video, we're gonna be talking about volume spread analysis and how to code it in Python as well. So let me explain what I mean by that, and we'll go and implement it. So what I mean by that is, um, so it is Wyckoff VSA, right? Um, Volume spread analysis. Okay, so how do we do that? So this is our candlestick, all right, and let me fill it up with color. Suppose this is our candlestick, okay, and let's also draw for um, short candle as well. So let me that. Okay, all right. So this is open, this is close, this is high, this is low. This is open, this is closed, this is high, this is low, right? So what we want to do here is that we want to look at the candlestick properties. Okay. um, so in every aspect of life, uh, whenever you have something you want to analyze scientifically, you want to define the properties for that particular object or something, right? So here we have this candlestick formation, right? And suppose it's a 15 minutes candle, so it will start at suppose it's the very beginning candle, so it will start here, open, then on the interval of 15 minutes it might travel up, okay, down, up, down. Suppose it went up, okay, it made high, and it came down, and it also went up and then closed above. Okay, so that's this configuration, right? Okay, and we can do the same for short. So what properties I'm looking into is that this property. So this is another property. This is what we call uh, body length. Okay, or just say candlestick body size, real body size. Okay, now here high to low is full body size. Okay, full candlestick body size. And this here, what we have is this is what we call a supply shoot, and here we call this a demand tail. Okay, so these are the properties we have. Okay, and the same goes for the short as well. So let's go ahead and implement it. Okay, and we can also do the same for volume as well. Okay, suppose this is volume. Okay, and instead of like looking into this, we want to look for the average volume over certain period of time. So suppose this is 30 ma volume. Okay, so that's what we that's the property we can see for the volume, so that last 30 candles, last 30 volume is exponentially averaged to the current. And we can also define range of it. Like, see, if we have this, no, we can go for, this standard deviation sort of concept, right? One standard deviation, two standard deviation, and three standard deviation, and same goes here as well. So what we are looking is, most of the data will lie here, okay, then here, and this will be very rare, third one. So what we are looking here is, we can actually categorize the volume, candle size, supply shoot, demand tail, full body size with this property, okay, this distribution, okay. So what we can see here, we can categorize it if the, suppose here we draw this line, okay, this is one, this is two, and that's three, okay. This is three, suppose. So this will be one standard deviation, this will be two, this will be three standard deviation, okay. And if the volume comes below this, then it's a very small volume, and we can categorize this, categorize it respectively, right? So here, if the volume bar comes between one standard deviation, it will be small. If it comes between 1 and 2, then it will be medium size volume, and if it comes between 2 to 3, then it will be big volume bar, okay. And we can also categorize the same for candle as well. So let's go ahead and look into it, and let me take a screenshot of it so that we can put it there, okay. Yeah, so let's go ahead and do this. So what I'll do is I'll create one new file. So here, what I'll call this vycofvsa.ipyn, okay. And let's see, we can go there and take the code snippet from there, okay. Mm. Taking quite long time to connect. Okay, connected now. Let's convert it as markdown cell, and then we can paste it here. No, for some reason it's taking way too much time to execute the code. Let's see. Hmm. Okay, now let's go ahead and do this. So what we are looking for is this, okay. So first let's define the candle type. Is this is bullish candle, this is bearish candle. So what we do is np.where if close is greater than open, then it's a bull candle, or else it's a bear candle, okay. So that's our candle type, and let's import the numpy, okay. And now Let's look into the body size. Okay, candle body size is this is the candle body size. Okay, open to close. So open minus close. Okay, now this is candle full body size. That will be um, high minus low, and then we can use now the this, right? So we can average it out, like take the average of the last 30 candle body size, and we can then um, make a, like, calculate the standard deviation of it, and then like variance of it, and then we can, you know, calculate one standard deviation, 2 days calculate the I'll show you what I mean. Okay, so candle body, so candle full body size ma is gonna be um pdta sma, candle full body size, and length is gonna be candle body length. Let's take 30 right now. Okay, and then we can take the standard deviation of it. Okay, candle full body size st div is gonna be a dot st div standard deviation, and we want calculate the standard deviation of uh, full candle full body size, and length is gonna be candle body length, or it's 30. Okay, and now we have calculated the standard deviation of it, and then we can add it to our moving average. Okay, so let's see. So candle full body size std1 is gonna be candle full body size ma plus 1 into 1.0 into uh, candle full body size std, right? This is the standard deviation one, and then we can repeat the same for 2 and 3. Okay, so this is our candle full body size. Now we can do the same for candle body size. Okay, and other as well. So let me show you what I mean. Instead of candle full body size, it's gonna be candle body size. Okay, and we can do the same thing for supply shoot and demand tail as well. So supply shoot is this distance. Okay, close to high or open to high. Okay, so how do we calculate it? um Supply shoot is gonna be, so supply shoot is gonna be if um if close is greater than open. If it's a bullish candle, the close is greater than open, then the supply shoot size will be close to high. Okay, high minus close, otherwise it's gonna be um high minus open. Okay, So this is our supply shoot. And while we're at it, let's calculate demand tail as well. So we can do the same thing here. And so demand tail is gonna be open minus low, open minus low, and here close minus low. And now we can do the same thing for supply shoot and demand tail as well. Okay, so here supply shoot MA, and here this is gonna be supply shoot, supply shoot, and supply shoot. Okay, and we can do the same thing for demand tail as well. If you're also in VS Code, then you can select multiple lines by clicking Control Shift and then down. Yeah, okay, and then if you want to go to the very beginning, then just click the left button, and there we go, and we can say demand tail there and here as well. Okay, so here we can do the same thing, demand tail, and so that's it. And let's just do the last thing for volume as well. Volume ma pdta.sma, volume length is 30, and then um, same thing. It's a statistical property of it. Okay, uh, volume, ma, and here as well volume standard deviation, and this is gonna be volume. So okay, all right. So we got that, and let's just plot it. Okay, so let's execute it, and then we can plot it there, and we can take the plotting module from here. Okay, and plot it here. What we're gonna do, we can just do that, and let's just plot volume first. Okay, so what we're gonna do, volume mpf.make add plot, volume type bar, and color gray. Okay, now what we want to do is we want to plot volume standard deviation 1. Okay, this is gonna be line, and color is gray as well, and width is 1. What's that error? Yeah, this one. And we can do the same thing for standard deviation 2 and 3. Let's see. Come on, plot it out. Okay. So we have to define the panel as well. So the panel we are in is panel 1, and let me just disable the volume here. Okay. So again, okay, I didn't do it here. Panel 1. Okay, so there we go. Okay, so what we see is we can now, you know, categorize the volume bars with respect to their size as well. So here we see it's greater than 3 standard deviations, so that means it's a very big volume. Okay, here as well, see, this is and in the Wyckoff methodology we're gonna use it for like stopping volume. Okay, so here when we see the big volume, then that means that the trend is about to stop. Okay, see, like here, 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 right? So that's how we do it, and we can also put the, candle body size, and we can categorize those as well. So let me show you just what I mean by that. um Candle body size. Okay, and let's plot it in panel 2. So there we go. All right, now we can also look into the panel that candlestick body size. See here, very big candle, this greater than 3 standard deviation, whereas here we see very small candle, see where it is less than 1 standard deviation. So we can, see if the candle is bigger or not, right? And here we can also use supply shoot, demand tail as well. So let me plot it out. Okay, let me plot it out here, demand tail and supply shoot as well. So demand tail and supply shoot. Supply shoot. Panel, this is gonna be 3, 4. Let's see, and we can also define the panel ratios as well on the argument here. Okay, let's see. All right, so this is what we see here. This is our demand tail, right? This is our supply shoot. So what do we see this um candle here. Okay, demand tail. Supply shoot is the last one here. See, very big demand supply shoot here, very big supply shoot. So we can say, like, if the supply shoot is greater than 3 standard deviation, we can enter short. If the demand tail is greater than 3 standard deviation, then we can enter long, right? So let's do that here. Let's take the code snippet from here. Okay, we want rid of that, get rid of that, and now let's look into the how do we do that. So demand tail, right? If demand tail is greater than equals to demand tail std_div3, then we can do that. And if supply shoot is greater than supply shoot standard deviation 3, then we can do that. And let's plot it out. I gotta do something about this. The speed is quite slow. So see here, we see some very good, I mean not very good, but good enough trade setups. Okay. And we can also like optimize it moving forward, like yeah, we'll look into it. So see here from the start, short here, long here, long, short, long, short, long, short. Here it was long, long, short, long, short, long, short, right? So this is a good trade setups, right? And this is like we can use it to like define what define the properties for what the candle is, right? So just like any physical properties for any object, we have the properties for the candlestick as well, and we can utilize the statistical model of distribution, and use the variance like standard deviation, and categorize it between 1, 2, and 3 standard deviation. Okay, so that's it for this video. And in the next video, um in the next couple of video, we're gonna be just going through different technical analysis, like after this video, we're gonna be looking into pivot point analysis, right? So we're gonna be using daily candle, so like combining higher time frame with lower time frame to find support and resistance, right? And it's gonna be really good video, and I'll see you guys in the next video. Okay, thank you.